closely. Bitcoin is not volatile if you're a long-term investor. Hey, what's up, guys? Welcome to Crypto on Fire. Daniel Paulino here, and today I'm going to bring you this video: 3 reasons why Bitcoin is not volatile if you're a long-term investor. We're going to be comparing short-term investing, long-term investing, how to actually build wealth. We're going to look at some of the richest people throughout history. What is it that they all have in common? What do they do? And then ultimately, I'm gonna show you what's gonna happen here in the next, let's say, 5 years to a decade with Bitcoin. So subscribe to the channel if you want to see more videos like this, and let's get right into it, guys. So I'm gonna start off with this, funny video. By the way, credits to Michael Saylor for a lot of the ideas in this video. But let's play this video. This is what happens when you're a short-term investor. There's a Vinacci film as well. Vizonacci film.
Yes.
Moderno. It's happening.
Is sold. Pump it.
Pump it. So apparently this guy, what was his name? Don Bajnak. I don't know, forgot what his name. He's like a meme now, and he's paying close attention to who's buying and selling, who's day trading, and he's paying attention. And whenever you sell, they call him and says, "Okay, he sold, pump it," and then they pump it. And if you buy, he's like, "Okay, he bought, dump it." So that's kind of like a funny meme that is going on, but it's just an example of what's happening, because for short-term traders, what's happening on the day-to-day basis does have, a lot to say. Now, one of the things that is interesting is that no one has ever lost money by holding Bitcoin 4+ years, and everyone thinks it's too late. When you buy, you think it's too late. So look at this guy. I guess this is a tweet from back in May 2011, I guess. This is what this guy says. "I wish I had kept my 1,700 BTC I bought at 6 cents instead of selling them at 30 cents. Now that they're $8, right?" So imagine this guy. He thought he was late. He thought he made a wise decision. But even $8, what is this, like 44K right now? So everyone thinks it's too late. And now it's starting to pump. I've been telling people, buy. When it was around 30,000, I was telling people that I'm buying. I thought it was a great idea. Obviously not financial advice, but even the McDonald's people, they're quitting, right? Why? Because Bitcoin is back. So let me show you some of the things that happen, right? So if you look at this chart right here, right, this is for the short-term traders. If you zoom in at any point here, not at any point, but let's say you zoom in whenever you see these reds. This red could represent, for example, a year or a month or a week. So if you buy and sold here, you could have lost money, right? Let's say you bought in right here at this top, right? You bought in, boom, and then it started to drop throughout like a year. But if you held on, now you saw a pump, and then a good pump, and then you saw then it's down. But then if you would have missed this huge pump, right, and then it went up to like 64K, then it dumped, and we was wrong, we sold Bitcoin, what a idiots, ha ha ha, you sold Bitcoin. And guess what? Now it's coming back up, right? So the point is that the volatility doesn't matter as long as you're a long-term trader. Why? Because the history proves, and as you're going to keep watching, because right now we're talking about the short term. Yeah, the short term, people who buy and sell short term, they want the volatility, they want the controversy. Why? Because they make the money in the spread. If the price always stays the same, they can't buy low or sell high. They can't short, they can't go long, they can't lose leverage, which is not something that I recommend, and I'm going to talk about here in a second. I'm going to show you a couple of key points. But the thing is that you want to keep calm and HODL. What does HODL stands for? Hold on for dear life. If Just imagine if you would have just kept buying, let's say 100 a month or 1,000 a month since 2010. Obviously not everyone can afford, 1,000 a month. But let's say you would have put 5% of your income starting in 2010, and you just kept buying no matter what. Just imagine how much money you would have had, right? But the key thing is you want to keep watching, because you don't want to do that in any investment, right? Because, but today we're talking about Bitcoin, right? Which is one of the technological phenomenons that is happening right now. But let's see what this guy says right here. It is virtually impossible for an individual to day trade for a living. 97% of those monitored lost money. Only 0.4 earned more money than a bank teller. Additionally, we find no evidence that of learning by day trading, right? So now this video, this little picture here, the number one reason why traders fail, right? Now, I'm not gonna encourage you if you feel like you want to make money as a day trader. I tried it didn't work for me. Now, obviously, I didn't give it enough time, but there's many reasons, right? I want to be a doctor, 7 years plus medical school plus training. I want to be a lawyer, 4 years plus law school, bar exam. I want to be a pilot, 3 years plus plus training. I want to be an engineer, 4 years plus 4 years of training plus PE exam. I want to be a trader, starts tomorrow, no experience, no training. See, that's what happens. That's why most day traders lose money, because they don't train. And the thing is that it's so painful to lose, to lose money, because when you're starting to day trade, you might have a period of time where you're just killing it, right? But then, boom, you're gonna have a day where you lost money, like I did. One time I click a button, boom, I lost $1,000. I was crying. I cried for a day. It was devastating. What's that guy from Robinhood app that it showed that his account was like negative, and then he just killed himself? The grind is real. Day trading crypto, you sometimes you can't even sleep because the price is going down. Let's say you have a leverage trade and it's going south, it's going the opposite, and you're about to lose all your money. How exactly are you going to sleep when you're about to lose all your money or some of your money? It's hard to sleep like that. So it's very difficult. Some people can do it, but the road there's a better way to do things, guys, and I'm going to show you. Now, what does Warren Buffett says? The stock market is a device for transferring money from impatient people to the patient people. So people who are day trading, they have a short-term time preference. They want to make money now, and they're willing to take all these risks, using leverage and borrowing money and waiting up and down and trying to guess what it's gonna do today based on the news. It's gambling, guys. But on the other side, let's talk about more of the long-term side. Now, Bitcoin is the digital transformation of property. For the first time, now you could own digital property. Before, you had to buy real estate. You had to buy gold, silver, all these different hard assets. But now you have the digital transformation of property. Bitcoin is a digital monetary network, right? It's transforming money, right? It's transforming property. And when you look at the long term of it, it's like electricity, right? Homes being powered, imagine the year is 1910 and homes are now being powered by electricity, right? Are you going to sell some of your electricity, or are you going to keep some of your, you want to sell some electricity to buy some candles, some oil lamps, just in case something goes wrong? Yeah, you might want to do that. But overall, the technological advancement was just moving on. Nobody wanted to use candles anymore. Now we have it's good to have some candles, right? But nowadays, who needs candles? I don't even own candle. I never, it's smart to have if you're a prepper or something. But having some candles, who does that? Nobody's gonna say, oh, I'm gonna sell my electricity technology or my electricity stocks to buy some candle stocks or something like that. It doesn't happen. So it's not really a bubble. It doesn't matter if the Bitcoin price goes down a little bit in the short term. The volatility does not matter. Why? Because in the long term, nobody's gonna go back to fiat. Who wants to go back to fiat when you have Bitcoin, right? Who wants to, right? Fiat is going down and the Bitcoin is going up, right? It's like, if it's like you have horse and buggy and you have a Ferrari. Why convert to horse and buggy when you have automated cars, right? If you have stocks, right? If you own stocks in a company with horse and buggies, and you have a stocks for a Ferrari, an automated car, why would you sell your stocks in a Ferrari to buy stocks in a horse and buggy? Right? It doesn't make any sense. It's just capital flow. Technological advancements is just moving on to where you're gonna put away the horse and buggy and you're just gonna stick to the Ferrari. And that's what Bitcoin is. In the long term, yeah, people are still gonna use fiat, right? People are still gonna use fiat or dollar or government paper, monopoly money. People are still gonna use it, but in the short term, but in the long term, Bitcoin is the Ferrari right here, and fiat is the horse and buggy. So it's not a bubble. Bitcoin is not a bubble. It's just money moving from one piece of technology, right? And this meme I saw, HODL, we are here, right? We're just moving from one piece of technology. It's just money flow from something that people are losing confidence in to something that people are gaining confidence in. It's like you look Netflix versus Blockbuster, right? You look at these trends. Everybody used to use Blockbuster, right? And you saw that throughout the time, once Blockbuster came out, you started to see that the money started to flow from one investment to the other. Was it a bubble that money was flowing to Netflix while Blockbuster was dropping? Was it a bubble? No, it wasn't. It was just people losing confidence. It was capital flow from a collapsing idea that people were losing confidence in, and it was just moving from one place to another. So a lot of people think that the volatility matters and all this. No, is money moving from an idea, let's say fiat, that people are losing confidence in, to something that people are gaining confidence in. Is the Ferrari versus the buggy, right? So does the volatility matter in the short term? It doesn't. Now, if you're a short-term trader, let's go back to the short-term traders, right? You have these dorks on the internet trying to predict the price. They have the Fibonacci chart. They have all of these things, all these charts. But guess what, guys? If, for example, 10 billionaires each decided to buy $1 billion worth of Bitcoin, all your mathematical charts are irrelevant, guys. It doesn't even matter. Now, if you go back, if you go back to the Netflix, who cares what Netflix was doing compared to Blockbuster in 2009 or 2008 for like 1 week or a month? It doesn't matter. It's irrelevant, because in the long term, if you zoom out to 2011, 2009, 2010, you saw that the price of Netflix was going up, the price of Blockbusters was going down, regardless of what it was doing on the short term. Regardless of the volatility, you saw that it was moving. Now, Bitcoin is an engineering phenomenon, right? So what do you need to do if you want to become wealthy, right? You have Andre Carnegie, Steele. He brought a technological advancement. All of these men here brought a technological advancement. You have Henry Ford's cars, Mark Zuckerberg, Facebook, Jeff Bezos, Amazon, Rockefeller, Standard Oil, Andrew Mellon, aluminum. So what do all these men have in common? What these men all have in common is that they all brought us a technological advancement, and regardless of what the price of their shares or the stocks did, for a 1 day period or a 1 week period or 1 month period, if there was volatility, if it went up and down, the price of Amazon, it dropped by 80% multiple times. One time it dropped by 95%. But guess what? It didn't matter. It didn't matter. Why? Because overall, in the long term, is going to prosper. It's going to go up. It was just a technological advancement. All these men, obviously their businesses had ups and downs. You have Standard Oil, John D. Rockefeller. If you learn a little bit about his story, it was a war trying to conquer, trying to be the dominant superpower in the oil business, right? It was ups and downs. And even Steve Jobs, Michael Dell told Steve Jobs to sell his business and return his money to the investors. Why? Because he thought it wasn't going to go anywhere. So, in short, what you have here, what you want to ask is that at the end of the day, trading doesn't matter. Volatility does not matter. Statistical models do not matter. None of it matters. So all these dorks online using the Fibonacci retracement, the RSI index, the money flow, the multiple TV screens, they're overlooking the fact that if Bitcoin is a monetary network, and if enough people with money and power decide to adopt it, nothing can stop it. And it's gonna go up by potentially a factor of 100x and 1,000x. The only question you want to ask yourself is, how much, Bitcoin is PayPal, Square, Cash App. How much Bitcoin are they gonna sell this year, next year? Why? Because these companies are going to, blow over all the expectations that you could have, right? Why? Because Bitcoin is that digital monetary network, is the dominant crypto right now. And guess what? It's gonna rocket, right? Regardless of whatever volatility is going on right now, regardless of what Apple did for 1 month in 2009, all of it is irrelevant. Why? Because we see that on the long term is gonna overcome. Even if it drops right now, guess what? It doesn't matter. If it drops, I'm just gonna buy more. That's what I'm gonna do. It's gonna be just a better opportunity to buy more, right? So if you guys want to learn more, about cryptocurrencies, how to earn more money with crypto, why? Because the more you learn, the more you earn. I have multiple links below that you guys can click on and learn, and start to profit, right? Because the only reason people didn't buy more Bitcoin in 2010 is because they didn't understand it, right? And the reason people don't buy Bitcoin today is because they don't understand it. So if you really want to understand what cryptocurrency is, what blockchain is, I have multiple links. Click below. Subscribe to my channel to see more videos like this. And for Crypto on Fire, Daniel Paulino. See you on the next one.